Yeah, my name is Marco Meyer from fxatm.com. I'm trading educator. Today's webinar is about the most important question in trading, in my opinion, at least one of the most important ones. As you can see, we're quite a small group today, just about 20 people. So you can use that opportunity to ask any questions you might have during the session or later on. We'll have plenty of time for that. Yeah, those of you who have been to the last webinar, which was busting some trading myths and stuff like that, might remember that I had that part with the question in there on the last webinar, but time did run out, so I couldn't go through that. So it's not that kind of a big part, and we'll have lots of time for question and answers, and yeah, maybe look at some charts or whatever you want to go into. Okay, so that's today's schedule. First of all, gonna do a little FXATM performance check, give you an update about what's going on there, then talk about the question that's so important, then have the Q&A live chat. And if you have any suggestion for future webinars, you can give me that, and I'll try to do one about that topic, because I'm pretty open about what topic to actually talk about. So, most of you probably already know Forex at the Market. If you don't know it, you can go to fxatm.com, as you can see at the top. It's a trading advisory, and basically what it is it's just like a public trading diary that I got there. So each day I check out the markets, look for trading opportunities, and I put those together in a new issue of Forex at the Market, which is nothing but the trades that I do on my own. So you can see what I do, why I do it, and how I manage trades. And most subscribers are serious traders with medium to large accounts, and the idea of it is just to trade for one reason, and that is to make as much money possible with the least effort possible. In other words, if you are into action then and want to day trade all day long, then it might be not for you. But if you kind of majored in your trading and already figured out what might work for you or not, then it might be quite interesting. One thing to notice is that since around May, June, I switched to strictly end of day trading. This means there's one issue each day and no more intraday updates. Before, I send out updates during the day, like moving up stop loss, taking profits or whatever. I don't do that anymore. It's really just one time a day, fixed time of about 1-2 hours, where I send out the new issue, and then you place your stuff there and you're done. And that's also what I do. I don't spend a lot of time trading. Actually, on average, it's not even half an hour, and I do that like just 5 days a week. On Friday, I usually don't look at any markets at all. When it is there, then that's it for me, and I look again on Sunday. So quite relaxed way to trade, quite profitable way, as you can see. This is the updated performance with like data from September 8th. That's when we did the last update. And yeah, we had some quite good months during the last couple of months. Things been really going well. Markets have been very, very friendly to us. And yeah, we really could take some nice opportunities there. Which means in the overall performance, we are already above what we did last year throughout the whole year. So that's really good. If it would stay like that, I'd already be quite happy, and if we can make more, the better, of course. Yeah, and that's what I just like. Didn't take me like 5 hours a day trading or whatever, and trading all day long, but really just trading end of day. meaning using daily charts, and we'll just look at one example trade that we did. This was one I decided to do on August 21. The idea was to sell pound Aussie, which you can see on the chart, entry at the blue line. So we put a stop sell order there. Stop loss above that one at 160.10. That's where you put the stop loss in. And little explanation where the traded streak entry in front of a Ross hook, even if it's not like the most classic example of it technically. It's valid, and I liked the overall setup. So we took that trade, and that's how it turned out. That was the entry happened on the next day, and market moved down nicely. And what we did, as you can see, here's what happened each day. On 22nd we got in, 23rd moved stop, 24 moved stop, 25 moved stop. So we just moved down a stop loss each day, one time, and finally got stopped out here on September 2nd with a quite nice profit of I don't know, about almost 3 times the initial risk I think that we got on that one. So yeah, that's quite easy to do because you don't have to sit there all day long, watch the markets. You can do other things, and that's what it's about for me when it comes to trading. Which leads us to today's topic before going into question and answers. Yeah, just going to answer those 2 questions down here. Yeah, Boykil, I only do end of day trades. No day trades anymore. I've done day trading also in the past, also with some success, but what didn't match for me was the time that I had to put in to get out what I got out of day trading. So I decided to just quit and risk more on the end of day trades, which gives me a better overall result because I can really focus on that. And when I look at the daily charts each evening, or it's almost night here in Germany then, I still get all that energy that I otherwise would have wasted day trading. So my decisions are more clear, more precise, and just less emotional, which leads to much better results for me. How long do the trades last? It really depends, Aviator. As you can see, that one lasted 1, 2, 3, 4, 5, almost 2 weeks, 2 trading weeks. Most trades last 2 to 5 days. 5 days, I'd say. Others go longer, 3 weeks. The longer the better, usually. So, but it's really completely different. Some trades just last 1 day where we get in and get stopped out on the very next day. That sometimes also happens. So, but usually a couple of days, and the longer the better. Minimum initial capital for trading style. Well, the nice thing trading Forex for me is that whatever account size you have, you can it doesn't matter what the stop loss is, right? If you've got a stop loss of, let's say, 300 pips, or if you got a stop loss for 30 pips, you can just adjust your position size to match the risk. So if you want to risk, if you've got a whatever, let's say $20,000 account and you want to risk 1%, which is $200, then you just adjust your position size to match that risk. And you can do that very nicely in Forex, which is one of the big advantages over trading futures, where it's not that flexible, where you just minimum trade is 1 contract, and if you trade futures on daily charts, you need quite a large account. Anything less than $100,000 is, in my opinion, not enough. But in Forex, you can trade on daily charts with even whatever $5,000 account, for example, without any problems, because you can just trade less units. Maybe you just trade 2,000 units of pound Aussie, for example, here, if that matches your risk. In other words, that's the risk you have on the trade in pips, and you adjust your position size to get the risk you want. What minimum risk reward you use? I don't have a minimum risk reward. I just get in a trade like here, and then whatever I get from the market, I get. The market doesn't care about what I expect or what my idea of risk reward is. I get what I get, and on that one, I get like 3 times the initial risk. On others, it might be 1 time or less. So I don't get in a trade and think, oh, it has to go down here for sure. I got no idea how far a trade goes. I just get in and then let the trade play itself out, and I try to not get in the way of the trade. That's the best thing you can do, I think. Do you use any automation tool? No, I go through all those markets. It's like about 20 markets I look at each day. And yeah, I don't need any automation tool. I can, when I look at a chart, it's like it takes 1 second for me to decide if it's interesting for a trade or not. And most of the time I just go like close chart, close, until I see something I think that could be interesting, and then I put it on a watch list, and then I decide if I take the trade and how I set my stop. But I don't have any automation tool for that. I'm really, most of the days I'm done in like 15 to 20 minutes doing that decision process. When you're doing it for a while, it gets quite automatic and easy, so it wouldn't help me if I would automate that. Okay, so let's go to today's topic. And yeah, after that we can do more question and answers, I'd say, though, so that we have that through. Boyke, I don't have any real preference. I like trending markets maybe more, but the thing is, most of the time when you have a trending market, it's going to stop trending and turn to a ranging market. And when you go into a trade in a ranging market, it could easily happen that it turns out that you get into a trend. So I don't really have any kind of preference there. Okay, so let's go on, and after that we can continue with question and answers. In my opinion, the most important question you have to ask yourself when it comes to trading is, why do I trade or want to start trading? That might surprise some of you, because most traders think the most important question is something like, what's the perfect setup to get into a trade, or something like that. But I believe for most traders, especially private traders who trade for themselves and not for some institution, this is really the most important question to ask yourself. And the continuation of that question, if you're already trading for like a couple of years, ask yourself, why did I initially want to start trading? Is it still the same idea? Does it still match, or is it different? So why is that the most important? So why do you want to trade, or why do you trade, or why do you want to start trading? And yeah, if you want, you can give me some answers, what your motivation is, or whatever, or what you think your motivation is. If you ever really thought about it, you can just type it down, so it's more interactive, which would be nice. Need more money, no boss, additional income, become fund manager. Okay, so that are some answers. And those are all reasons that usually you have when you start out trading. But the thing is that for a lot of traders, this changes in some way after a couple of years. or earlier, because you might not even be aware of it, but I think it does, and it did for me at some point, and I know from a lot of students that they have the same issue. So I want to go into some of those, and those are not bad motivations that you listed. I mean, that's all valid reasons to start out. But one of the most common ones that's true is because you might be bored, or you think that the markets and trading are interesting, you kind of like that, or you want to be entertained, want to get rich quickly. That's a common one too. Usually that one leads to disaster, but you want to get excited, maybe want to have a kick in some way, maybe day trading more than you should, for example. You want to figure out the markets or find the holy grail, want to know how you can beat the markets. You might want to prove something to yourself and or to others. That's a common one too, especially when you started out trading and maybe you kind of like lost some money and others know that. And they kind of picking on you and saying, come on, what's going on? You said you're going to make lots of money and now it's all gone. Or your wife says that to you. Maybe trading is something you think is something for you because you like discussing the markets with others, for example, online in one of the million trading forums out there, where you can, you probably know those kind of stuff. I've looked into it for a while, and it was quite funny because most of the time they're just discussing some charts and don't really trade, I think. At least it doesn't look like it to me. Or you don't know. And maybe you say, well, I just kind of enjoy trading, but really, does anyone really enjoy trading? I don't know. I don't. Or if you do enjoy trading, probably you trade for another reason than you should, and that is trade to make money and to make as much money as possible with the least effort possible. And doing that is always very boring. So it's quite the opposite of what we talked about. It's not exciting, it's not entertaining, and it's not a lot you can discuss with other traders or anything like that. At least for me, it got very boring over the years. And in my opinion, if you want to switch from that category into that one, so from losing or break-even trader to the winning trader category, you somehow have to go from the stuff that the markets excite you and are interesting. You have to go to the boring section. So that's how it should move, because if you trade consistently and in a profitable way, then it's just plain boring at some point, because you just do the same stuff again and again, and it's not even like you have to be very intelligent or something like that to do it, or you have to figure anything out. It's really not very entertaining or anything like that. And if you want to have the exciting part, then that's fine to some extent, but you should be aware that you have to pay a price for that. It's kind of like I like to compare it with professional poker players. They also don't get very excited playing poker or anything like that. They just follow their strategy again and again and again and do their thing. And those who lose money usually get quite a kick out of it and get very excited and things like that, which is fine, but they pay a price for it. That's what it is. And you should be aware of that. So why it's not good if you enjoy trading too much, or if it's exciting for you, if it gets emotional. You're very likely to overtrade because you want to get entertained and you want it now. So you're going to take the next best trade instead of waiting for the one you should. Because if you don't, there's just nothing you have to do if you have no positions open and you get bored quickly. You might manage trades the wrong way because you're trading emotional and you are already kind of in a very emotional state to some extent. If you trade for excitement or to get entertained, then that's what almost has to happen, because it's not the trading itself that excites you, but more the emotions that you're going to have trading. In other words, when you all know that you get into a trade and it moves into your direction, you're happy, you get a nice feeling, then again it moves against you, and then you get, oh shit, it's moving against me, and you get the other extreme of that, and that goes on, and you look at your dollars going away or that you make, and that definitely pushes you out of balance to some extent, and that leads to lots of wrong decisions, because you might just get out of a trade too early to take money, because you're happy about it, and you definitely want to avoid the feeling that you will have if you watch it going against you, or the other way around. You're likely to not trade in a consistent way and stay in kind of like the look for new trading methods, start trading it, have a drawdown, quit trading that method, look for a new one, and start all over again. Cycle forever. Those of you who are trading for a couple of years and are not yet successful know that very well. And the only reason why I can write about that or present you that is that I know it very well too from my past years when I started out trading. I've been in that one really for really years, literally, until I really got down to what the real issue is. So instead, you keep changing your strategy. And one of the reasons, at least to why I think I did it, is because if I would have stopped it and just faced the truth, that is, there are losing trades and drawdowns, deal with it, then what should I do? The whole adventure would be over, right? Once you have your strategy set, and especially if it's one where you just trade once a day, then it's not that exciting anymore, right? Boyke is asking, are these your or Joe's opinions? That's pretty much my opinion here. I don't know if Joe would share all of those or to some extent, but if you've read Trading is a Business, which is a popular book by Joe Roth, then you know that he talks about that stuff too. So I think you would agree with most of the things that I present you here. But of course, probably not all of them, or he would phrase it otherwise or whatever. But this is my opinion and from my experience, so that's not Joe's. So, question is, how do you get to the bored trader section, those who are finally making money with trading? First of all, you really have to think about why you want to trade very deeply, almost kind of like meditate about it, which is just another word for contemplating something very deeply and thinking about it, looking at it from different angles. And you really have to do that. Think about, why did you initially start trading? Probably the first intention was right, to make money and to have more time for other stuff like your family, your hobbies, whatever. That's how pretty much everyone starts out when it comes to trading. Think, hey, cool, there's the markets, I want to have additional income, I want to have a new job, no boss, no more trouble with customers, so and a lot more time for other things. Don't want to work that much anymore. You want to get away from your whatever 50, 60-hour week. And but the truth is that most traders, after a couple of years, find themselves at even worse situation, meaning that they spend a lot of time trying to figure out trading and waste a lot of time in front of the charts. So think about how much time you already wasted and realize that it's really wasted time, because at least when I came to that point and really looked at it, I just figured out that I really just moved in kind of like a circle for years and didn't get anywhere. The only thing that changed was from one strategy to the next one, or from that kind of way to view the market to another one, or whatever, but in truth, nothing really changed. It was always the same thing. Yep. Yeah, and realize that you cannot have both. You make money trading, or you get entertained by it. As I said before, it's probably the same with professional poker players. I've never done that, so I don't know, but from what I've heard about it, and some traders I talked to have been into both, it's pretty much the same thing. And at the end, it's really your choice, and you have to make that one. And my last advice on this is that if you cannot make it to the board trader section, long term, I think it might be better to quit trading completely for a while until you're capable to do so, because really the truth is that some traders are that addicted to watching charts until that excitement they get out of it that there's no chance they can actually go to the board trader section, as I call it here, to the traders who just do their thing without emotions and just make money with it, what it should be like. And if you don't, that hobby will just cost you a lot of money. And then the question is, aren't there better ways to spend that money, right? And even more important, it costs you a lot of valuable time and maybe your health to some extent, because trading all day long in an emotional state is not healthy. It's not gets you out of your balance. Okay, that's that topic I wanted to cover today. It's kind of different of what I usually do to some extent, but I've got the idea that a lot of trouble that traders have comes from that direction. So maybe it's not true for everyone. For sure, it's not. But I think it's true for a lot of people, and maybe you can get something out of those ideas and think about it. Whatever. It's just it helped me a lot to have done that. So maybe I thought it's valuable. Okay, so that was the presentation part, and now we basically can go to the question and answers. If there's anything interesting to that topic we just talked about. I don't know if you agree or if you can maybe find yourself there somewhere or not. It would be interesting for me to know. So what should suggest to do for the rest of the day, whatever you enjoy. And at the beginning, when you day traded for like 5 years and your nervous system is totally screwed up, then it's not easy to find something that's really fun, right? Because you won't find a lot of things that give you the same, that excite you in a way like that, and give you that kind of stimulation that day trading does, for example, especially day trading with more risk than you should, for example. So find some hobbies and do what you enjoy. Spend time with people. Get into whatever interests you. I'm lately trying to figure out how to brew good espresso. That's what I spend a lot of time lately. Yeah, whatever interests you. Of course, for 3 years not enough. Be good and successful. I've been in for 1,085 days. For end of day, I use the New York close Boyki. That's like usually around 21 GMT time. Sometimes an hour earlier or later. I don't always wait for the close actually, because if it's just like 1 or 2 hours ahead, then it's not. It won't make a lot of difference. I don't mind if it closes 10 pips higher or lower. That doesn't change anything for me. Which trades did you take recently? Currently I'm in Euro dollar long and Aussie CAD long. And before, good question. I kind of like forget quite quickly what trades I've been in. I could do like on the next session just a review of the last 20 trades or something like that. When do you do entries? Boyk is asking. I just placed. You can go back to that example. Boom, boom, there it is. I thought that's like, I don't know when it was, but somewhere around the New York close. And then what I do is I place a stop sell order at that price at 5,790 with the conditional order to place a stop loss for that position at 160.10, and that's it. It goes automatically these days, right? With pretty much any broker, you can just place a stop sell order and then you walk away. You don't have to wait. And when I've done that, then I don't care anymore until 24 hours later. And that's it. But I don't do the entries manually or anything like that. How is trading with an EA? Solby, I don't know, to be honest. Depends on the EA, I guess. I think there for sure are some EAs that work nicely. I don't see a reason why they shouldn't if you have some decent ideas. But I don't use any of those. In the morning or at night? No, really, just around the New York close. No limit orders, just like in that example, you can see that price is trading around here, which was probably 158.10 or something, 16, I think it says. Hard to say. And it's trading above the price where I want to get in. So what I do is I place stop sell order, meaning that when price actually moves down to 157.90, then I want to sell at the market. And for that, I just put in that order. And whenever price should get down to that 157.90, then my order will hopefully get executed at a good price. But it's not a limit order in that case. It's a stop sell order. It would be a limit order if I would want to get in above price, but I don't do that very often lately. Pound US dollar long. Al is asking. I'm not in the pound US dollar long. I don't know what the question is exactly. Do you specialize few currencies? I trade pretty much all currencies. Mm, yeah, everything that's liquid enough to be traded on daily charts. So I don't trade the exotic pairs, but pretty much everything that where the major crosses, everything in there. Sometimes when it comes down to something like British pound, New Zealand dollar, then I think about if I take the trade or not, because the spreads usually are quite wide on that one. Same is true for the New Zealand dollar, yen, for example. But everything else like pound Aussie, pound Swissy, whatever, and all the majors, I trade all of them, which is about 20 markets. And I also track the US dollar, Norwegian krone, and the SEK, which is the Swedish krone. So when do you move stops? I move stops once a day, also at the close usually. So around 21 GMT. That's when I move stops. I also do that once a day, not intraday. Do you do hedging? No, I don't do any hedging. Hedging is kind of like, I don't know, I never figured out when that would help me, because for me it's the same as closing a position. If I want to be neutral, then I just close the position. Hedging kind of like just creates additional transaction costs for me. So, do you look at trades at times during the day? No, Boyki, I don't do that. I just do it once a day. I've got real-time data turned off all day long. I don't watch the news. I don't go to Google News or whatever, to any website. I really do nothing for 24 hours, and then I look at the charts, and that's it. Sometimes I get emails from other traders who say, did you see that the Swiss National Bank kind of like pegged the Swiss franc? Did you notice? Then I'm like, oh no, I didn't. I don't look at economic data releases or anything like that. It's not that I don't know about that stuff or that I'm not aware of it, but the thing is I tried pretty much all of it, and at the end of the day I just figured out nothing of that stuff really helps to improve my performance. It just complicates decisions and it costs me nerves. So I stopped doing it, and to really reduce it to the minimum that is necessary, and that's not a lot. The thing is, each time you look at the market and look where your trades is, that costs you energy each time you do, right? Because it's either it's trading in your way and then you're, yeah, cool, it's trading my way, or it's going against it and then you're, oh shit. And on some trades, like, if you look at that one, for example, on a day like that, when you're short, and then if I would have checked what's going on intraday, I would be trading up there to sometimes big green candle. I would think, oh shit, it's going against me. What should I do? And it might stop me out. And then you see it moving down again, and you're happy. But I just turn on the computer, and then I see that candle and think, okay, that's it. And if I got stopped out, I already see the result of getting that I got stopped out, and then I'm done with that trade. And what really kind of like screws you up, in my opinion, is to watch a trade go against you all day long. That's where, at the end of the day, you might not be able to make clear trading decisions because you spend all your energy with what happens or doesn't in the markets, right? Do you trade gold? I'm watching gold, but the problem with gold for me is that during the time I usually place my orders, gold is not trading. That's exactly that hour or so where gold doesn't trade. That's why I didn't get into any gold trades yet, but I'm watching it and there's some nice trades going on there. I'm trying to integrate it, but didn't yet. Aren't you worried about your stops being seen by the market? No, I'm not. Because, yeah, I don't believe that there's anyone sitting there and looking for my stop. I just don't believe that. And if you trail a stop on a daily chart, like here, if you see that, and I moved it just above the high when it's trading down there, if the market really moves up there, it's not just because they want to run my stop or anything like that. If the pound Aussie moves up 100 pips, then there's some reason for that. And when I get stopped out by that, I get stopped out. And that's fine. And sometimes I've got bad luck and get stopped out just by a tick, and then the market is down again. But on other occasions, I realized that I'm the same kind of lucky because the market comes one pip close to my stop loss, but does not trigger it. So both things happen, and I don't think that there's anyone sitting there and thinking, oh, that guy got an order here at 52.40, let's run the stop. Not in the forex markets. Maybe in some illiquid stocks, especially in the past when there were human beings who were market makers. I'm pretty sure they did that kind of stuff, front running orders and things like that. But in something like to move the pound Aussie, you really need lots of money. What do you do for the rest of the day? Whatever I like. So sometimes I do things like that, webinar or tutoring of students. Take care of emails, whatever, or just go out for a walk. I do a lot of hiking, for example. Yeah, listen to music, whatever. Do you consider economical data coming out to decide if you're going to trade certain days? I did that in the past, Boyki, but I stopped it altogether. The only time when I might think about not taking a trade is if I know that there's an interest rate decision that might be surprising. So some interest rate decisions are pretty boring because it's pretty clear that nothing's going to happen. But if it's not so clear, and then you can really get some volatile moves, and then I might be cautious. But otherwise, I don't care. How do you trade your stop? Usually on daily charts, just move it a couple of pips above the highs, like I did here on that one. On some days, I might not decide to not move the stop loss and leave it where it is to give the trade more room if I think it's just doing some sort of correction. So that really depends on the trade. I've got no 100% fixed rules for trading down the stop loss. It's not. I don't say I've got a trading stop of 200 pips and then I move it lower each day. I kind of look at what the market did and then decide from there. I try to not do it in a stupid way. That's the only thing. So if there are two highs above each other, I don't place it exactly above it, but just a couple of pips higher to make sure I don't get stopped out in a way that doesn't make sense to me. How do you calculate suggested stop moves? Yeah, just talked about that. Basically, it's based on the daily charts. Here it probably went like that, just down here, down here, down here, here, and so on, and then got stopped out there. Yeah, and that's a good example how far trade can go, and you don't think, when I got into that one, I didn't think it would go down there. If you would have asked me, I would have said it's probably going to stop somewhere here, where it did before, or exactly at that level here. Yeah. So you never know how far market is going to move. And that's why you want to keep things simple, to stay in for the case if it does really move strongly. Yeah, and that's another interesting thing. I'm not very good in predicting direction or anything like that. I've got a hit rate of about 50%, I think. So I'm not better than if you just throw a coin, 50-50. That's my win-loss ratio, so I'm not very good in predicting direction. But I think no one is, so that's fine to me. Okay. Any other questions or topics that are interesting? How many pairs watch? I think it's like 20. I can show you if you want. Give me a second. So you should see MT4 now. And yeah, that's the markets that I watch. And it's 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6. So it's 30 markets actually. Wow. Yeah, that's. Can you see that one? Can you see the charts now? That's the markets I'm watching. And when I go through actually at night, it just goes like that. For example, I see euro dollar, it's interesting. No, it's not. Pound, not interesting. Dollar Swiss, not interesting. Dollar yen might be interesting. Aussie dollar, not interesting. Nothing, 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 interesting, nothing, nothing, nothing. That's how I make my trading decisions. It's really like that. Might be interesting. No, 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 no. Maybe, no. I'm already in that one. I might kind of decide to go short on that again. No, 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 no. And that's my first process, what it's like, and then I just kind of like look into those that might be interesting in more detail, and then decide to take a trade or not. But it really goes like that fast. I don't I don't sit there and draw in 1,000 trend lines, Fibonacci retracements, and whatever. No, I don't use any indicators. The only thing that I use is the average to range, just to get an idea what the usual risk is like, and to keep it kind of like the same for all trades. But that's it pretty much. That's not interesting too. Aussie Swiss is one that kind of looks interesting for me. But the problem with the Swissy pairs is that since the Swiss National Bank, the SNB, decided to keep Euro Swissy at 120 or higher, it really got kind of difficult to trade those pairs because, yeah, especially to the short side, right? Because I just might be trading into the Swiss National Bank coming back again, and I think they will at some point. So that's really, and that's sad because I really love trading the Swiss pairs. I'm a little bit sad about that. No opportunities in the Swiss markets. How do you get that discipline? Solby's asking. Well, first of all, that's again the same thing. I believe you have to get to the point where trading just kind of like, it's not that exciting anymore, and that's where you can start to trade in a disciplined way. And at the end, you just have to do it, right? And you're the only one who can do it. There's no one else who can do that for you. You just do it or you don't. And at some point, you just have to do it because that's the only way you can make money with that stuff. So how do you enter your trades? Well, one example is the Aussie CAD. Couple of days ago, we got the reversal bar here that got me interested. So what I did was place, I don't know where exactly I got in. I'd have to look that one up. But I just placed like an entry order to go long up here. Some ticks above, I don't know, was it like 40 or 45? I think it was 40. A few pips above to get in here and put the stop loss down there. And then get in with the stop market order, meaning if price moves above that level, then my order would get executed at the market and I'd be in a long position Aussie CAD. So that's it, and then I walk away and come back on the next day, and then I see if I got into any trades. I'm in there right now, long Aussie CAD. Stop loss right now is somewhere here. I think it's at 80. And yeah, today it's doing like nothing. Looks like it's doing nothing. So probably I'll decide to move the stop loss here or at least to break even tonight. What direction would you tend on those charts? Well, on the Aussie CAD I got alarmed because it moved down quite a lot and with a nice swing, and then I thought, okay, maybe it's going to move up again. And we got that reversal bar, and then I got interested in going long. That one also is not really an option for me. But what I wanted to show you is that the initial process of just if a market is interesting or not really goes quite quickly. And the dollar yen, if it's the idea here for me would be kind of like it did move below that level here. And at some point today it reversed again like it did a couple of times before. And I'm not sure yet if that's the trade I want to take, but if price moves above here, then I might be interested to go along that market. And I'd really like that one, which is just a 1 to 3 high. For those of you who know the law of charts formations, then that would be a nice one for me, but I might not take it because the Swiss National Bank, as I said. So maybe no new trades today. Okay, only trading daily charts naked. Yep. No indicators. After eliminating no interest charts, how do you bring up all next time? I got a couple of templates, and on one of those I've got all open again, and then I just save them as watch list in this case, close them through, and next day open it again, save it again as watch list, and that's how I do that. Okay, get one question. How many pips you target and spotted what, please? I don't use any targets. I did that in the past, but I don't do that anymore. I just trail the stop loss and see how much I can get. And whatever I get or not. And that's it. I don't have any idea how far a trade is going to work out. For example, the Aussie Cat, of course, I hope that it goes all the way to the moon. Maybe I got stopped out tomorrow with a small profit. Maybe it goes higher. I don't know. Maybe I got stopped out today down here. Maybe it moves all the way down. Don't know. Okay, just got a message that I have to wrap up. So thanks a lot for being here. Hope you enjoyed it and get out something valuable for your trading. And yeah, see you next month. And if you got any suggestions, send me an email. What you want to get covered in more detail. Yep. So have a nice time.